Hi everyone, I just wanted to share a quick story or a conversation that I had with a client earlier today. Um, Basically, the client, gets on a call with me. It's a potential client. I haven't agreed anything yet, but let's see how things progress. Um, in terms of the conversation, this particular client owns 16 properties valued at a total of 4 million, roughly 4 million. Obviously, this is on the phone. What the next step is, basically, I'll be sending over a spreadsheet and another PDF document that he needs to fill out. So we have our templates, and that allows us to review his position, in more detail. But this was just an initial call, and 16 properties worth 4 million. His location is UK, United Kingdom, but he's also in and out of Dubai and Jamaica. So interesting individual. But anyways, what he wanted to do. So, so he presented what he wanted to do. And what he wanted to do is transfer all the properties into a trust for the benefit of his 6 grandchildren. So transfer all properties in trust for the benefit of his grandchildren. Now, he's a good man because he made a good point. He said, "You're the expert, however." And, it's always nice to be called the expert. But he said, "You're the expert, so, you tell me what's going on and what your thoughts are on the rest of it." And, it's a good point that he made, because sometimes, occasionally, very occasionally, I do get the odd call whereby, someone's adamant on doing something because they've read something on the internet, but it's not really the right way to go about things. So anyways, so he made a good point by calling me an expert. I'm just messing. So he said, what are your thoughts? I told him, look, I said, it's a great thing that you're doing. You're looking to fund your grandchildren's, not education. It's, he wants to look after his grandchildren financially. But the problem is, and this is the tax point, and this is the point of the video, is that a transfer into a trust exceeding the nil rate band, which is 325,000, and fair enough, let's say 650. This is what I'm told him, basically. Let's say 650 between husband and wife, gives you 4 million less 650, 3.35 million. 3.35 million is subject to an inheritance tax lifetime charge at 20%. So lifetime charge. So inheritance tax is not only on death, it's also payable in lifetime when transferring into a trust. 60% on 3.35 million, we're looking at easily £700,000, immediately payable in lifetime. Is that a cost that you really want to incur? There is another way, or there are better ways, and that's the benefit of speaking to someone like myself, whereby I can, scope out better opportunities. One potential. This is just initial thoughts, but for example, we have one of the reasons a family investment company these days is more popular than trusts is the fact that there's no income tax charge at 20%. So assets transferred into a trust would not be subject to the £700,000 UK lifetime charge, treated as a chargeable lifetime transfer. 15 or 16 properties in his own name. We can potentially look to incorporate. He is running a business. Obviously, we need to, as I say, the point of this call is that lifetime charge of 20%. But there's so many things that we can explore now. We have incorporation for which will benefit him for income tax purposes, capital gains tax purposes, and inheritance tax purposes. No 20% charge. And that company potentially can have a discretionary trust as one of the shareholders. Just ignore the part where I'm talking about, from property incorporation and the rest of it. These are just initial thoughts that, ideas that we start running through our minds, through our tax minds. I just thought I'd share that story with you. And do reach out. My name is Omar. I'm a chartered tax advisor. And these are the typical type of scenarios that we get involved in. So property related, inheritance tax, corporate restructurings, anything tax related, give me a shout, and I'm pretty sure we can have an initial discussion and see where we can go. Speak to you soon. Bye.